Do you feel confident and prepared as an investor entering into 2025? A recent study from Vanguard's Investor Pulse shows that investors are expecting a 6.4% market return for 2025. So, to make sure that you feel confident in your investment strategy, I wanted to discuss an article from Capital Group's Jared Franz, Laurel Pinelli, Mark Casey, and Cheryl Frank titled 5 Keys to Investing in 2025. It's no secret that entering into 2025, market optimism remains strong due to economic growth, potential interest rate cuts, and advancements in artificial intelligence. The S&P 500 has delivered impressive returns over the past 2 years, and there's several key investment themes that could shape the future. Of course, no one has a crystal ball and can tell us where the market will be in 2, 5, or 10 years. But with a proper investment strategy and investment policy statement, you can put your mind at ease that you have an all-weather portfolio that'll be able to support you through good markets and bad markets. So with that out of the way, let's discuss the 5 themes for investing in 2025. Now, I have to warn you, this may get a little technical at times, so I apologize in advance, but it'll be worth it if you're able to hang in there with me. So the first theme is titled The Benjamin Button Economy. Are we aging in reverse? And this is pretty interesting. The US economy is showing a puzzling yet encouraging phenomenon. It seems to be aging in reverse, much like the fictional character Benjamin Button. Now, traditionally, economic cycles progress in a predictable pattern, or somewhat predictable pattern. There's early cycle recovery, mid-cycle expansion, late cycle slowdown, and then eventually a recession. However, instead of following this expected trajectory, the economy appears to be shifting from a late cycle phase back to a mid-cycle, a rare and kind of unexpected occurrence. Several key factors are driving this reverse aging of the economy. And the first is rising corporate profits. The second is increased credit demand, and the third is softer cost pressures. And what I mean by that is company wage growth and costs have started to moderate, relieving pressures on their profit margins and allowing businesses to maintain or even expand operations without aggressive cost-cutting measures. So what does this mean for you as an investor? Well, if the economy is truly shifting back to a mid-cycle phase, one, this could mean historically stronger market returns, since mid-cycle markets tend to be some of the most productive phases for stock market returns. Two is prolonged investment opportunities. The extended economic expansion means that growth-oriented assets like stocks and real estate may continue to perform well for longer than expected. And the third is the potential delayed recession risk. If this trend continues, a potential recession may not occur until 2028 or later, rather than earlier predictions of 2024 or where we're at today in 2025. Now, before we move on to the second theme, I want to thank you for watching this video. If you're new to my channel, my name's Sean Stevenson. I'm a certified financial planner and wealth associate at Confluence Financial Partners, where I've spent hundreds of hours reviewing and implementing financial plans and investment strategies, and I want to just share all my knowledge with you. So if you're interested in seeing more videos on retirement planning and investing strategies, consider subscribing. And if you're within 5 years of retirement, click the link in the description and get a copy of our Retirement Readiness Workbook. It's a simple, actionable PDF guide that will walk you through what we believe are the essential steps to a worry-free retirement, such as clarifying your retirement vision and lifestyle goals, assessing your savings and income sources, and helping you even plan for taxes, healthcare, and legacy needs. Now, let's jump into the second theme. So the second theme is titled The Industrial Renaissance, a new era of growth. So the United States is undergoing a manufacturing and industrial revival unlike anything we've really seen in prior decades. After years of offshoring and global supply chain dependencies, it seems that companies are beginning to reinvest in domestic production, leading to the industrial renaissance that is shaping industries, communities, and investment opportunities. This shift is driven by record-breaking capital investments from private companies and government initiatives, which are boosting job creation, enhancing infrastructure, and strengthening supply chains. So what's driving this industrial renaissance? Well, there's several key factors, and the first of which is reshoring and supply chain resilience, which means companies are bringing production back to the US. The second is government initiatives and infrastructure spending, and we're seeing this heavily into the semiconductor manufacturing, clean energy, and infrastructure projects. And the third is technological advancements in manufacturing. Robotics, AI, and automation are making domestic manufacturing more efficient and more cost-effective. So the resurgence of US manufacturing could create some long-term investment potential across several key sectors, such as industrials, real estate, technology and automation, and materials and energy. Now, the third theme is AI megatrend, a technological revolution with far-reaching impacts. It's no secret that artificial intelligence continues to dominate conversations in technology and in finance, with significant implications for various industries. While some of the near-term expectations around AI may be a little overhyped, its long-term potential remains vast. AI is set to revolutionize not just technology companies, but also industrial sectors requiring automation, energy production, and data processing. Investments in these data centers, semiconductor production, and AI-driven software solutions are expected to surge. This will drive demand for infrastructure, electricity, and raw materials, benefiting industries like utilities, mining, and manufacturing. Investors who position themselves in AI-related industries may benefit from its growing adoption over the next decade. As I warned, this might get a little technical and into the weeds, so I hope you're sticking along with me. We have 2 more themes to discuss. Now, the 4th theme is titled The Golden Age of Healthcare. The healthcare sector is entering a transformative period, with pharmaceutical and biotech companies making significant advancements in drug discovery and treatments. Despite regulatory uncertainties and market fluctuations, major pharmaceutical firms have robust pipelines with over 200 drugs in development. Exciting breakthroughs in treating diseases like ALS, sickle cell anemia, and muscular dystrophy offer promising investment opportunities. As innovation accelerates, healthcare remains a critical sector for investors looking for growth and stability. And the 5th theme of the article is titled Resilience in Investing: The Power of Long-Term Perspective. If there's one lesson that history has taught us, it's that resilient investors are rewarded over time. The stock market has faced countless economical, political, and global disruptions, yet it's continued to grow in the long run. Imagine it's New Year's Day 2020. If investors knew what lay ahead, a global pandemic, supply chain breakdowns, record inflation, aggressive rate hikes, major geopolitical conflicts, and banking sector stress, many might have thought it was a terrible time to invest. And yet, from January 2020 to today, despite all these challenges, the S&P 500 has nearly doubled in value per the Capital Group's article that I referenced. Those who remained invested rather than reacting to the fear of the unknown benefited significantly. This same pattern has repeated itself time and time again with the 2008 financial crisis, the dot-com bubble, and as a little side note, here's a link to a video that I did analyzing the dot-com bubble versus today's market, and then in the 1970s with runaway inflation and an oil crisis. In short, crises come and go, but long-term investors who maintain discipline often emerge stronger. So let's talk about investing in 2025 and beyond. With elevated interest rates, geopolitical uncertainty, and talks of a potential economic slowdown, many investors may feel the urge to retreat to the sidelines. And I love that the 4 authors of this article included this as the 5th theme, because I think it can be so important to remember when times are good, but even more important to remember when times are bad. Plain and simple, history shows that trying to time the market can be far riskier than just staying invested and staying the course. And here's why. 1, market trends tend to reward patience. The S&P 500 has delivered an average annual return of about 10% over the last 100 years and just under 7% inflation-adjusted returns despite wars, recessions, and financial crises. Second is missing the best days can crush your returns. Research has shown that just missing the 10 best days in the market over a decade can slash your total returns in half. And I'll cite all the links to this information in the description below. These best days often come after periods of high volatility, which is why staying invested is so critical. Now, the third is innovation and productivity drive long-term growth. Regardless of short-term market noise, human progress continues. AI, automation, clean energy, and biotech breakthroughs will fuel economic expansion, benefiting the long-term investors. As we head into 2025, embracing resilience in investing is more important than ever. The greatest returns often come to those who are able to withstand short-term storms and remain focused on their long-term financial goals. Understanding these key investment themes for 2025 can help investors navigate the financial landscape and capitalize on opportunities for growth. So what's the key takeaway here? I believe 2025 will offer plenty of opportunities, but success will come from long-term thinking. By understanding these 5 themes, you can make informed investment decisions and potentially position yourself for continued future growth. The good news is you don't have to invest in the markets alone. If you have any questions about your personal investment strategy, please consider scheduling a complimentary retirement consultation call with me in the link in the description. I hope you enjoyed today's video and found value in it. And as always, great days ahead.